Good morning, and thank you so much for joining us for the MedcomCares Disaster Recovery Card for Your Clients webinar. I'm Casey Hope. I'm the Marketing Manager at Medcom Benefit Solutions. Happy to be here with you this morning. And I am joined by President of Medcom, Michael Bracken. Michael, good morning and welcome.
Thank you, Casey.
All right, thank you so much for those of you who are joining us today. We do appreciate your time. We appreciate the fact that this is a crazy time for everyone, and that you would take some of that craziness out of your day just to spend with us to learn more about how we can help one another through this time. I just want to let you know that we are recording this broadcast today, and I will be able to send out the slide deck, the recorded presentation, as well as a general flyer and some frequently asked questions about MedcomCares to you once this webinar concludes today. And with that being said, I'm going to go ahead and turn it over to Michael. And please keep in mind that if you do have questions while Michael is speaking, feel free to put those in the questions panel and we will address those at the end of the webinar. Michael?
Thank you, Casey. And we're going to want to keep this really informal today, but we've got some important information we'd like to share. And happens to circle around with the whole COVID-19 and the fact that under the existing Internal Revenue Code, there is a provision where an employer who is so inclined may offer tax-free money to all their employees or a segment of their employees based upon the needs that they anticipate. So in terms of an overview, we're going to talk about the Section 139 plan, which is the tax-free program that I just mentioned. Then we'll talk about what our employer is doing now and how an employer who was committed to moving forward with this type of strategy using a 139 plan might get that done. Okay, just wanted to mention that the MedcomCares program is an extension of the Medcom Consumer-Driven Health Plan Division. And in putting everything together, it's really just an extension of the same technology we use currently and have for many years with our flexible spending account programs, health reimbursement arrangements, and health savings accounts. So we've added an additional part to this same chassis, and that's the disaster recovery plan that we call MedcomCares. So how does this look on paper? Well, it turns out that the IRS in 2001 added a new provision of the tax code called 139, and it still exists to this day. And what it does is provide tax-preferred treatment for both employers and employees in need. Now, between 2001 and 2020, the program has been used for targeted needs for things like relief due to a hurricane or a fire or a tornado or a flood. So it's been more targeted, which is why most of us were not really fully aware of this provision of the tax code until recently. But it does provide tax-free qualified disaster relief payments to employees to assist them managing expenses anytime there's a federally declared disaster, just like right now. It turns out that COVID-19 doesn't meet our typical parameters of a natural disaster, but it has been declared by the federal government as a disaster, and therefore the 139 plans are available for employers looking for ways to assist the people that work for them, or that have been furloughed, or they've been laid off, etc. And typically, it has a lot of ability, and it's very workable from the perspective of disaster relief. The whole idea is to get money in people's hands as quickly as possible to help them pay for their groceries, their office supplies, or their clothing, or the utilities. So a nice feature of this is there is no auditing or substantiation requirement on the part of the employee. It also generally covers expenses considered to be reasonable and necessary related to personal, family, or funeral expenses tied in with a natural disaster. Think now COVID-19. So where are employers today? If you are a consultant, you probably have somewhat of a handle on where your clients and prospects are, but the first round of the PPP loan program has been completed. We're now into the second phase, and those employers who've missed the first one are working very, very closely with their bankers to get everything applied for and trued up so they can ultimately receive the money as well to help out with payroll. We're seeing a lot of educational institutions that have had to make some really tough decisions, and they're laying off many non-faculty employees. A lot of employers have decided to reduce hours rather than basically put in place massive layoffs. We've talked with some banks in Midwest as an example, where they decided to keep everybody on payroll, but everybody went from a 40-hour week to a 30-hour week. And that's really how they addressed the first round of dealing with COVID-19. And many employers have had to lay off. We've all read the newspapers and the news, and the number of people who have applied for unemployment is well into the plus 20 million range. So what about employees? Many of them have received the money from the stimulus package of $1,200 individual, $2,400 for couples filing jointly, and an additional $500 per child. The number of people who have filed for unemployment is actually up to now 30 million, which is just astounding. Many employees are working remotely without any direct hardship, but in most cases they've incurred out-of-pocket expenses in making that transition. And I can speak for Medcom because we're exactly there. We have 100% of our employees working remotely. And in most cases, they did incur expenses making that transition to help us out as an organization to continue to provide quality service. The sad news about the unemployment is the numbers have been so huge that many states are really hemorrhaging. We're in Florida. Florida is one of those states where they're really having a very difficult time getting those unemployment checks out. And as a result, there are a lot of people in pain, and cash flow is a significant problem. If you're one of the 30 million who qualifies for unemployment, but you might not receive your first check until the middle of June, paying for groceries in May might be tough. So what does MedcomCares do? Well, it provides the employer with the opportunity to send contributions out that are loaded on a debit card. There's a broad range of areas where the money can be utilized, and we'll go through that in a few minutes. But the important thing is it's not relegated to just healthcare purchases. It may include groceries, it may include office supplies, it may include utilities, it may include educational expenses, including daycare, it may include healthcare, but there's a broad range of possibilities. It's really incumbent upon the employer to decide which one of those 6 merchant categories they'd like to move forward with. Most employers seem to want to go with the full, broad 6 merchant category setup, but we have had some that wanted to make it more limited. For example, just groceries. All the funds are made available through a debit card, and that's part of the process of us implementing and distributing those debit cards to employees of the employers that ask us to handle this program for them. All the money is tax-free. It's really important to remember, keep that in mind, that that every single penny is tax-free, and therefore it's going to go a lot further than a payroll expense or something like that. Although the intent is not for it to have this program take the place of payroll. And from the employer perspective, it's nice to know on the back end that if they do decide to pull the trigger and go forward with a 139 plan, that for any money that's not utilized by employees during the period that the program covers, all of that is returned back to the employer after a final audit on the back end. We'd like to just go through a couple of case studies just to give you a better understanding of what other employers are looking at and doing in order to help their employees. I've been realizing every single employer is in a different situation. Case study number 1 is a situation like Florida, as I mentioned a minute ago, where the state is really struggling to respond to the number of people who have applied for unemployment. The word is that most employees will not receive anything until the middle part of June. And so what this employer looked at was saying, listen, we need to help them get to the middle of June from a cash flow perspective. We're going to give everybody $1,000 on a debit card. We're going to limit it to grocery stores only, but we feel like we've done our part to help them with that transition from going from today, they're out of a job, to June 15th before they see the first check from the state of Florida or whatever state it might be. Case study number 2, and I'm going to do full disclosure because this is the exact same program that Medcom implemented for the employees that serve us. We did a head count. We looked around. We were just really very, very fortunate and successful in getting everybody acclimated to a home environment, but we recognized that every single one of them had some kind of out-of-pocket expense in order to make it happen. In my case, it was a new wireless printer and scanner and a monitor. For other people, it might have been a desk or a monitor or a landline or furniture or whatever it might be, but we pretty much are confident every single one of our employees made some kind of personal investment to help us retain our business and to also continue without really dropping anything at all. And so what we determined was we thought $250 was a fair amount. And so we implemented our own 139 plan several weeks ago. Today, every single one of our employees who works on a full-time basis card that originally had $250 on it. And we went ahead and offered the full menu of types of merchants where it can be spent. So to give you an example, I used my card several nights ago to do takeout meal with my son, and I was able to use my MedcomCares program card to pay for my meal. And I was very ecstatic about that. And the amount of goodwill we received as an employer has been really off the charts. Educational institutions, this is really a tough one. I think, again, you've all seen the papers, and schools still aren't sure what's going to happen in the fall, but for the non-faculty employees, many are being furloughed. In some cases, that includes ongoing institutional payment of their medical coverage. In some cases, it does not. This is a scenario where an educational institution looked at providing each one of their employees who had been furloughed with a $1,500 tax-free payment that would be loaded on a debit card. So that's one strategy educational institutions were looking at. Another example is, I mentioned some banks in the Midwest. This is something along the lines of what they're looking at. In most cases, the ones that we've talked to did transition to a 30-hour work week for everybody, so they didn't have to have any layoffs. Part of their initial commitment to their employees was that they would continue to pay them for 40 hours a week through the month of April. But ultimately, it comes to the point where you have to draw a line and say, can we afford to do this beyond April? And they decided to do more of a stratified approach to contributions to help people with groceries during May. As you can see here, for the people at the lower end of the economic strata, in terms of their payroll of $15 an hour or less, they offered up $1,500 for people making between $15.01 and $25 an hour. It was modified to $1,000, and then people at 25 plus, they limited to $500. But that was their goal in trying to make sure the money got to the people that needed it most first in a greater amount. Okay, COBRA. We talked a minute ago about furloughed employees. In some cases, the employer will continue to cover the full medical coverage premium cost. In some cases, they'll let the employee pay the whole cost. In the case of someone who's laid off, it's generally going to be available ongoing coverage under COBRA. So there are a couple of different ways an employer can help with former employees as it relates to funding COBRA premium. One strategy is to simply send out a debit card. In this case, was one where they figured it would be $400 a month for 3 months, or a total of $1,200. So each person who was COBRA eligible was given a debit card with $1,200 with the hope that they would utilize that to cover their ongoing medical premiums for 3 months. And finally, the COVID-19 is not immune to all types of industries and employers. Law practices, in many cases, have really been decimated in certain specialties like criminal and family law, transactional business law, commercial real estate closings. Those types of areas in law have really struggled or really struggling. Likewise, primary care physicians, with some exceptions, it's opening up a little bit, but even the professional firms have had to cut back on hours, lay people off, furlough people, and this is a suggestion here where a law firm is looking at making available $2,500 tax-free to employees who have suffered either reduction in hours or been laid off or furloughed. So let's say you have a client who's an employer, or you're a particular employer. What would be the process if they decided, well, gosh, a 139 plan really works nicely into the next part of our strategy in dealing with COVID-19 as an employer? Clearly, the first part is having a consultation and looking at the goals and objectives of the organization and whether or not the 139 plan fits in to complement other initiatives the employer's going through. We have a call later on today with an employer who has been funding through a $50 gift card per week. The challenge there, as you may know, is that the gift cards per se are not tax-free to the employees from a technical perspective, IRS perspective. The 139 plan is, so that's an example where they're most likely going to want to convert the gift card approach to the 139 approach, where they can take advantage of all the different components of the tax code that are in the favor of them as an employer as well as their employees. What about timing? If you're in New York or New Jersey, timing is going to be a little different than if it's in Idaho. So employers going to want to look at, do I do it now? Should I give it another couple of weeks to kind of ride this out to see what happens? Budgeting and cash flow are obviously very, very important here. What is available? If the employer has their PPP funds in the bank, they're generally more in a position to look at offering up a 139 plan to supplement payroll and other things. And also their special considerations in all cases, depending on where the employer resides, what type of business they're in, et cetera. But so the front end is really a consultation with your client to discuss where they are, and again, whether or not a 139 plan really complements what they want to accomplish over the next 90 days. So here's how it works. In many cases, it resembles a health reimbursement arrangement. And what we mean by that is the employer is the driving force behind how it's created. You may know, for example, a health savings account is really set up by statute in most cases, whereas an HRA provides a lot more latitude for the employer. So the employer will decide how much money they want to make available. The good news about a 139 plan is it does not have any kind of non-discrimination testing requirements. So the employer has a lot of latitude in terms of who they make funds available to. But they decide how much they're going to make available. Believe it or not, there's no statutory maximum benefit. And then they're the ones that fund 100% of the program. On the back end, any unused funds are returned to them. The administrative fee that Medcom charges for employers that hire us to administer this program are based on the number of participants and subject to a minimum per employer. And the whole process generally takes 2 weeks or less to go from we want to move forward today, how do we get started, to the point where every employee who is on the eligibility list has a debit card in hand and is freely available to access the funds through the selected merchants that the employer picks. Okay, another nice feature of the 139 is, we mentioned I think a minute earlier, is that There is no back-end requirement for an employee to keep all the receipts, to submit receipts. There's really no in-back substantiation at all. And if I view it in terms of a more regular natural disaster, like a flood or a hurricane, again, the goal here is to get money in hand where people can eat, they have clothing, they have shelter, they have all the things you would typically have. And there is no requirement, therefore, to go through an auditing process, because the money, again, the goal is to get money in hand. There is a minimum benefit for our program of $250 per participant, as well as, again, there's no statutory maximum. The employers that have hired us are generally looking at a 90-day program, but it could be less, and that's really up to the employer. And every single penny that's invested by the employer is fully tax deductible in terms of their profit and loss statement. Okay, this is a matrix that gives you a deeper look at the types of merchants who are available for a 139 plan. We've mentioned in this discussion that some employers have elected to be a little more restrictive. We have had some that just want to do grocery and RX. Most are looking at the broad section of possibility. But again, when you're consulting with your client or your prospect, and you get under the covers in terms of what their specific needs are and where they reside, what types of changes have taken place with the employees that serve them, either through reduced hours or furloughs or layoffs, they're going to be better positioned to have a preference. Again, but it starts with all 6 of these potential merchant categories, but it is up to the employer's discretion as to whether or not they would like to make it more restrictive than using all 6. Okay, a couple other advantages for the employer. We mentioned a few minutes earlier that there is no non-discrimination testing, and technically a 139 plan is not an ERISA plan. And what does that mean? Well, basically means that employer can decide themselves where they think the funds are most necessary, and they decide. And actually could be employee by employee. It could be salary versus hourly. It could be all types of different parameters, but it's really the employer's call. We're just going to want a list of who's on the program, what their home addresses are, and how much money the employer has committed to contribute towards them. So the employer is going to set the contribution schedule that best meets their needs. And as I mentioned, every single employer has a different need. The employer has full discretion of where the funds are eligible. As you mentioned just a minute ago, they can go with the big list of merchants, or they can make it more restrictive. And once the program has been completed, within 30 days, there'll be a full audit, and any unused funds will be returned to the employer. What are some of the restrictions? One that this is a question that comes up frequently, so we wanted to really head it up straight ahead. But the 139 plan may not be used in any way towards demonstrating to the regulators that the PPP funds that were received should qualify for loan forgiveness. And again, just want to repeat that the PPP is intended for payroll only. 139 plan is not payroll. It's really a fringe benefit if you want to look at it from that point of view. So if an employer spent $50,000 on a 139 plan, those funds may not be used when the employer goes back to the IRS and says, please forgive this loan that you forwarded to me, and here's the information. Again, the 139 funds may not count towards that loan forgiveness option. There is no substantiation on the back end, but the IRS always has a kind of prevailing rule on reasonableness. If an employee hypothetically was audited and the CEO received $100,000 and everybody else in the firm got $250,000, my guess would not be considered reasonable, and that's a little bit of a risk. But within the context of reasonableness, there clearly is a lot of latitude for an employer. And finally, as you would expect, the IRS does not look kindly upon double dipping. So in terms of communicating with employees, there is the potential, hypothetically, with a medical expense where someone could receive reimbursement on their HSA and the debit card, which is double dipping if it's absolute same dollars, and that most likely would be problematic in the event someone was audited and that was identified. All right, well, we're going to talk now about what is the process, how do we get started, and it's my pleasure to turn the presentation over to Casey Hope. Casey?
Thank you so much, Michael. I appreciate it. To go ahead and get started with the MedcomCares program, there are a few steps that the process kind of includes. The first thing that we want to do is consult with you and talk to you more about the program to kind of get a read on your employers or your needs if you are an employer, and how this could best work for your employees. After that, we go through the typical proposal process, do the implementation and the program setup. Once the funds have transferred and the administrative fees have been paid, your employee communications will go out, and that's something that Medcom takes care of for you. It's something that comes directly from us and will go out to your employees, kind of explaining the program to them, the benefit that they're going to receive, and how they can use that. And then the debit cards will also go out at that same time. The program will continue up to 90 days. It can be shorter if needed. And then at the end of your plan period, all of those funds will go back to you, the employer. So that is kind of like the typical process of how this gets started all the way to the finish of the program. Further than that, we've got our fee schedule, and fees will vary just depending on how large or small the groups will be. We have our standard setup fees and a minimum fees. So the fees do include the $300 setup fee. There is an employer minimum administrative fee of $375. So as you can see here on this chart, how that typically works, and we can of course discuss that with you in more detail if you would like. We talked about going through the proposal request, putting that through. One way that you can do that is by accessing our website. If you go to MedcomBenefits.com, from our homepage, you will see a request a proposal button at the top. It's here on this screen in green. And then once you click that button, you will get the screenshot that's in front of you. You'll get this form where you can just put in your information, and this will go straight to our proposal department, and we will contact you for further information. One way that you can help us kind of cater better to your needs and kind of know more about what we're going into is in the additional notes section, which isn't included in this screenshot. If you could just include which possible categories you are looking at, if you do have restrictions, and a projected contribution per employee. You don't have to stick with that. There's nothing set in stone until we make, the implementation calls. But if we could get an idea of where you want to start, it will definitely help us out in moving forward. After, if you do not want to do the proposal online, we do have other ways, of course, to contact us. You can call our sales department, you can email our sales department. Philip Baker is our sales associate, and he'll be glad to talk to you about any questions that you have about moving forward with the program. You can contact Philip at pbaker@medcombenefits.com, or you can call him here at the number on the screen. And of course, his information will be sent out to you at the conclusion of this webinar. One other thing that we wanted to share with you is this article from the Wall Street Journal. It was April 3rd article, and it focuses on the Section 139 and how that can work for employees, how it's beneficial for employers. It just gives a little bit more insight and a little bit more detail into the things that we've talked about today. It's an incredible article. The link is here, but it will also be included in the slide deck that you will receive, so you can definitely copy and paste that into your browser to bring up the article and read that. And of course, we can't fail to mention the additional solutions that Medcom Benefits provides to our consultants and our employers. We do ACA employer reporting and penalty appeal support. We have a wide range of consumer-driven health plan administrations that we do. FSA, HSA, HRA are just a few of those. The MedcomCares program falls into our CDHP division as well. We offer COBRA premium billing and administration, as well as health and welfare compliance and actuarial solutions. We have a full and complete HIPAA privacy and security package as well. So as you see, we can cover a lot of different areas for your employers' needs that they may have. Now is the time. If you guys have any questions, I want you to feel free to submit those in the questions panel. Michael is here to take those questions and answer those for you. However, if you don't have any questions at the moment, but you do think of some afterwards and you want to reach out to us, we have additional ways other than just contacting Philip that you can reach out. We are very active on social media and LinkedIn, so feel free to reach out to us via LinkedIn. You can always sign up for our emails on our website at medcombenefits.com. And then here's just some general contact information for you if you need that. Michael, one question that we have seen over and over, I just want you to clarify. This MedcomCares program is not restricted to current CDHP clients, correct?
That's correct.
Excellent. So anyone who finds this useful can contact us about setting up this MedcomCares program for your employer and employees. We don't have any further questions today. I do appreciate everyone joining us here and being a part of the MedcomCares program and wanting to learn more about it. I will be sending out the recording of the presentation as soon as possible. Michael, thank you so much for sharing information and for being here today. We certainly appreciate your time as well.
Thank you, Casey, and thanks everybody for attending. We hope you have a great day.
Absolutely. Thank you.